I'd like to tap into your background on the retirement side because this is a lot of what we're talking about today. It ties into retirement planning or future planning for Canadians. One of my clients said a long time ago. They said, "Listen, we've accumulated wealth, and we're not going to spend it in our lifetime. As hard as they try, it just isn't going to occur." And they said, "Listen, we want to start gifting." And I remember the comment they made, and it stuck with me. It's been years. And they said, we'd rather give with warm hands as opposed to cold hands. And again, I think it's very impactful. And so we're getting a lot of these conversations. We have a lot of wealthy folks that recognize they'd rather help their kids today, but there are some pitfalls. And so what I'd like to do is maybe get a little bit of some feedback from you of what you think, what's important for Canadians that are in this situation that might be wanting to gift. What should they be mindful of? What should they be thinking of?
Okay, so if we're thinking about gifting during your lifetime, what the strategy here is that you're trying to give to your adult children, typically, so they can enjoy that. But as the older parent, you're disposing of assets, so you're triggering a capital gain, so you're paying taxes on that today versus later. Um, once you've gifted money to your adult children, they're under no obligation to give it back to you should you need it for your own retirement. So you want to make sure that you are stable within your own finances. And also, once you've gifted that money to your adult children, they can do what they choose to do with that. They might invest it prudently. They might spend it on enjoying a good life. Uh, but it's out of your control as the give or. So those are things to be thinking about. Um, what else? But I really do want people to think about what's the tax implication today, and then also be ensuring that they do have enough money for their own retirements. People are living longer and longer, so you want to be prepared for what life is going to throw your way, and for the end of life.
Now, come estate time, what are your thoughts about charitable giving and the benefits to the estate? I often say, you know, individuals have a couple people they can actually designate as a beneficiary. There's family, friends, there's a charity, and then there's the government, which unfortunately ends up being the largest beneficiary of a lot of Canadians' estates because they don't actually do the proper planning. And charitable giving or gifting, if it's important to individuals, it does have a tax benefit. Would you mind sharing your comments on that or the benefit to the
Yeah.
estate?
So, Wes, what I think you're talking about is when somebody dies, you're deemed to have disposed of your assets. So there's a capital gain on investments. Okay. Typically, if someone donates securities in kind, so they could be mutual funds, stocks, those units that are associated with that. If you donate units in kind to a registered charity, what happens is the capital gain associated with that is eliminated. So you could reduce that tax bill on death by donating securities in kind because you're eliminating your tax bill, as well as the estate will get a donation receipt for the fair market value of that donation, which can also further reduce the tax bill of that final return. So there's some planning to do there. You want to make sure that you've made that direction in the will. You want to talk with the executor, your tax accountant, to make sure you're crossing your T's, dotting your I's, donating those securities in kind. But there's a lot of potential there to be saving some money. And this also it forms part of somebody's legacy because they're being charitable, to be tax efficient. So there's more money to give to their beneficiaries. So thinking about asking good questions